On Point with Craig's Investment Partners.
The information provided here is general in nature and it's not financial advice. It doesn't take into account your situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. Before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services or to view the Craig's Investment Partners Financial Advice Provider Disclosure Statement, please visit our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. G'day team, hope you're all well. It is February now, and that means I am starting to get excited. Why? Well, a few reasons really. Valentine's Day, then it's my wife's birthday, and the NRL season is almost upon us. Not in any particular order, of course, of importance. But the other big thing that happens in February is the local reporting season kicks off across the NZX. So we will hear from probably 2/3 of the NZX companies. Not everyone is on the same reporting schedule, so there is different times during the year that different companies report their results, but there is a big chunk that will be reporting over the balance of this month. And the reason that's important is because there's one big question that we are all asking ourselves right now, and that is whether some of these early signs, these green shoots about the economy starting to recover. You know, we've seen the manufacturing PMI improved, we've seen the confidence indicators improve, there's other bits and pieces that are telling us that things are getting better. We're all sitting here wondering, well, are they genuine? Or is this another false start? Because about a year ago, we're in a similar sort of situation. We thought things were just improving and then that sort of fizzled out and it was another challenging year. So that's a big question we're asking ourselves at the moment. And the reporting season, I think, will go a long way to helping us answer that question, because the thing about earnings releases is that they are very much real time. They give us an up-to-the-minute pulse check about what is happening out there in the economy. And that is in stark contrast to some of the other indicators we see, particularly on the economic front. There's a lot of economic releases that we see. The GDP report, you get the unemployment report, you get the inflation report, all very useful, all interesting, all incredibly important, but they're not always current. Take the GDP report. The next one of those comes out in the middle of March, and that will cover the December quarter of last year. So we'll get it in the middle of next month and it will cover October, November, December. Now, is that any use to us to know how things were going on Labour weekend last year when we're trying to think about this 2026 recovery that we're all hoping for? The unemployment figures, they come out a little more quickly, but the labour market data, that's notoriously a lagging indicator. And what I mean by that is it's sort of the last thing to move. So when things are getting worse, unemployment still stays quite low, even when you enter recession, typically. And when things are recovering, like we hope they are now, the labour market data takes a while to catch up and unemployment still stays a little bit high. So right now it's still at 5.4%. That's normal because when businesses see those early signs of recovery, they don't go and commit to hiring a whole lot of new staff right away. First, they try and get a little bit more out of their existing workforce and they just watch and wait. And is this real? Is it going to be sustained? And it's only a little bit later that they actually start taking on staff, because once you've hired those staff, you've got to pay their wages permanently, right? So you don't want to commit until you are sure that things are getting better. So we don't learn a lot from that either. But the earnings releases, now that is very much a different story. They are much more up to the minute and they will tell us where things are headed. And I think that will give us a lot of evidence that will help us determine whether those confidence surveys and other indicators are genuine signposts or whether they're another head fake. It won't be the numbers themselves in those earnings releases, because remember that this reporting season will largely cover the second 6 months of 2025. So all of these companies are coming out and saying, look, here's what we earned, here's our revenue, here's our profits for the 6 months ended 31 December 2025. And we all know 2025 was still a pretty tough year, particularly that middle patch. So, July, August wasn't a fantastic period. So some of the numbers will look a bit subdued. Some of them might look downright disappointing, but that's okay, because in addition to those numbers, the cash flow statements and the P&Ls and all the rest of it from the period they're talking about, we also get, usually, an outlook commentary. And that is where the board, the management team, the CEO talk about what's happened more recently. And that is where I'm very hopeful and optimistic. And I think that should show us that many businesses have seen a pickup in activity in these first 7 or 8 weeks of this year. If we are in recovery, this is where it will show up. So there's lots to watch, lots of businesses we should be focusing on, and a lot of companies that will be under the microscope. Some of the real heavyweights of our market are set to announce results in the days ahead. This week, there's only a couple. I think we've got Scala up on Thursday, Southport on Friday, but next week it really all heats up. On Monday we've got Contact Energy, we've got A2 Milk, and I think we've got Freightways. That's a really interesting one. Freightways is always a useful barometer of economic activity. Some of the others that I tend to keep an eye on because they are quite sensitive to what the economy's doing, which means we can learn a lot more about the macro picture. Port of Tauranga, Fletcher Building, Somerset is another one. Obviously, the housing market has a big influence on Somerset, so we might get some clues there. Listed property, I think, will be interesting, not just because interest rates are lower, but because we might hear some feedback about how their tenants are feeling. Is there more tenant demand? Is there any rental growth on the horizon? So look, there'll be plenty to learn right across the board. I think the key thing to remember is that some of the results themselves might still look a little bit soft. Some of those numbers might not be fantastic, but that's okay. I will personally be paying a lot more attention and putting a lot more emphasis on the comments about how this year is shaping up so far. Early days, but I want to know, how are forward orders and bookings looking? How do the past several weeks look compared to last year? Are they up? Are they down? Are they sideways? Are any businesses confident enough to offer some early guidance for the year ahead? Or are they holding their cards close to their chest because the outlook is still a little bit cloudy? I'm hoping that some of those clouds might have cleared and that management teams and boards and CEOs will have a clearer picture of where they might be headed. So this is where investors should be looking for evidence that this recovery story we're all hoping for is real. We'll see it more here than we will in some of those dated releases like the GDP report, like the labour force report. They tend to be a lot more reactive, tell us more about what's in the rearview mirror than what's in front of us. If the domestic economy genuinely is turning a corner, the reporting season is where we will see evidence of that first. So make sure you're paying attention, make sure you're reading some of these earnings releases, and stay tuned right here so we can make sure you stay informed. Thanks for listening, team. We'll talk again soon. Enjoy your week.
For more insights, visit craigsip.com.